Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi mining community, welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Artem Volynets, who's the founder, chairman and CEO of ACG Metals, whose vision is to consolidate the copper industry through a series of roll-up acquisition, targeting copper producers with best-in-class environment, social and governance characteristics. Artem's career spans major leadership roles across the international mining sector, from steering large-scale M&A to developing assets in complex jurisdictions. Under his leadership, ACG Metals have been building a portfolio that blends strategic acquisitions with disciplined project execution. In this conversation, we're going to dig into how Artem navigates competitive copper acquisitions without overpaying, approaches technical challenges with fresh thinking, and adapts plans based on community input. We're also going to hear his take on jurisdiction surprises, the realities of operating in higher inflation environments, and the strategic moves he believes that will set ACG Metals apart in the years ahead. Artem, welcome to the podcast. How are you doing?
Very well. Nice to be here. Thank you very much.
Yeah, thank you for coming on the podcast. And as we always start these podcasts off, wonder if you can just tell us a little bit about your career, how you got into the mining industry, probably from when you graduated, how your career journey has gone up to sort of present day. So I'll hand it over to you.
Thank you. I'm not going to bother you too much with too many personal details, but I have to say that my career in mining started well before I was born, because my father was a geologist, my grandfather was a geologist, and as much as I tried to get away from the family thing, it didn't really work. I grew up in other side of the Bering Sea, from where President Trump and President Putin are supposed to meet at the end of this week in a Russian peninsula called Kamchatka. And I didn't have a choice but to focus on things in mining, where my family has led me to. I went to study in universities in America, moved to strategy consulting, and then relatively quickly focused on the mining sector. And then my key client, the gentleman named Brian Gilbertson, you may have his name. He's the one who created BHP Billiton as the world's largest mining company. He created the merger and he wanted to buy Rio Tinto very quickly, and the board of a new company decided that's too fast. And therefore, he was recruited to be the CEO of a small aluminium company in Russia, where he asked me to join as a head of strategy. I did, and I spent 10 years consolidating the aluminium sector worldwide to create the world's largest aluminium company called Rusal, of which I was head of strategy, deputy CEO, etc. When I listed Rusal in Hong Kong in 2010, we achieved a pre-money valuation of $20 billion. That's before we raised another two from the markets. And that was a culmination of a series of roll-up acquisitions. That is an inspiration for what we are doing with ACG Metals. I set up a vehicle in London, originally as a SPAC, now converted into a true operating company through acquisition of Gediktepe mine in Turkey in September of last year. It's a first transaction on a path to create a global copper-focused mining company through a series of roll-up transactions. So repeating the same strategy, but now in the copper sector.
Got you. Thank you. One question I was going to ask, you mentioned obviously your family were geologists and in geology, and that I take it that led you into the industry. Do you think you would have gone into mining if your family wasn't already in mining?
God knows. I have tried my best to escape the family curse, moved to US, studied economics and business, but ended up in doing the same thing that my father and grandfather to a certain extent. So I believe in karma and destiny, and certainly this is my destiny.
Yeah, got you. And I suppose you don't necessarily know, but I just wondered if, because you were obviously around mining, because your family were in mining, whether that led you into mining. But if you weren't around mining during your early years, would you actually have taken that path, or would you have gone into a different discipline? So yeah, just
Um,
curious.
It's a very good question. It's a what if question. I'm a simple person. I like mining because it's a simple industry, yet highly complicated on details, and it's focused on real assets. And I like to think of mining assets as a big cash printing machine, and that gets me exciting as a CEO of a public company with a chance of building and for that company to own a number of these cash printing machines. So that is exciting. I'm not perhaps less excited about the technology sector, about the consumer goods sector, but mining is cool in my simple terms.
Yeah. So I wondered if you can just give us a snapshot of ACG Metals, so our audience knows a little bit about the company.
So we are a very new player, recently born, less than a year old. And yet, in less than 12 months, we achieved quite a bit. Today, ACG is a producer of gold and silver, generating $90 million of free cash flow per year based on last year results. When we sold 57,000 ounces of gold equivalent. This year, our guidance is 36 to 38,000 ounces, but the free cash flow is likely to be similar given the fact that gold prices are higher. We acquired the asset that produces this cash flow, Gediktepe, in Turkey from a Turkish conglomerate called Çelik Holdings and its subsidiary Lydia Mining in September of last year. 3 months later, we raised $200 million to finance the brownfield expansion at the mine to move from production of gold and silver into production of copper concentrate and zinc concentrate to the tune of 25,000 tons of copper equivalent. That move is fully funded through the bond placing that we done at the end of last year. We are halfway through the project. It's proceeding on time and on budget. And once completed, and we go to full capacity roughly in the middle of next year, our free cash flow generation will increase by 30+%. So making us, even though young and a small, relatively small company, but highly cash generative, and as such, significantly undervalued at this stage. We are trading just below 2 times free cash flow. The companies in our sector, the small ones, even trade around 8 times. So there is a space for us to gain as we execute on our base case business plan. As a young company, we spent most of the last 11 months putting the base case together, which means acquiring the asset, getting funding in place, signing up EPC contractor, getting the team in place, etc. And we only hired brokers 2.5 months ago. The first research reports on ACG Metals were published in June of this year, in the middle of June. So we are only starting. It's been literally 3 months of our interaction with investment professionals, with retail and institutional investors. Happy to see the interest in our company and as we are making our first steps. As I said, the vision for us is to build a much larger platform. We see a very significant potential from the first asset. Today, ACG is under $200 million market cap plus $200 million in bonds. The NPV of the asset is around 700 million. So there is a significant upside on the base case with continuous high cash flow generation. But this is the first asset. The strategy for us is to acquire similar or ideally larger assets as we move forward, with a vision of having 200,000 to 300,000 tons of copper production in 2 to 3 years' time. In order to get there, you need to work on a number of transactions. My humble experience tells me that it is 1 out of 5 that works, 1 out of 3 if you're lucky. We have just about 8 to 9 deals that we're working on. So we shall see from us hopefully soon about our next acquisition and the next acquisition. But given where the copper market is going, we are keen to put further operating on near producing assets on our platform before the copper prices run too high too fast.
Everyone seems to be chasing producing copper assets right now, in obviously such a competitive environment. How do you actually win an acquisition and still avoid overpaying?
So number one, we don't get our investment ideas from investment banks. We have been in the sector. I've been close to 30 years. My team, 20 to 30 years as well, each. So we have a relatively large network of connections where we can source the deal ideas. Number two, we do not participate in auctions. We do not compete typically with other players in the cash auction. Because I believe in a M&A transaction in today's world, especially when it comes to copper, you have to focus not on one element of the deal, which is upfront price, but on the many elements that create value, both create value for the buyer and for the seller. And therefore, a transaction structure where part of the consideration is cash, another part of consideration is shares, and there could be milestone payments linked to the development of the assets, of finding more reserves, of perhaps the commodity prices moving up considerably, is all part of the transaction structure, which allows for both the seller and the buyer not to be seller of the buyer, but to become partners in future value creation. And that is the best way to have a bilateral exclusive discussion with the asset owner in order to create a transaction ahead of competition. And when it comes to competition, there are many players, as you correctly say, in the world that are looking to buy copper assets. What differentiate us? In experience, it's not a big deal. You know, the mining is simple. M&A one can consider is simple, but it is experience of doing that M&A in mining that comes very handy. And I've been buying and selling mining assets for most of the last 27, 28 years. It's an operating experience. We have an excellent operating team currently working on our asset in Turkey, where we managed to decrease costs in the first half of this year versus first half of next year, which is unheard of in a inflation high environment such as Turkey. And then it is ability to move fast, which we can. I'm a chairman and CEO. I have a supportive board. Our decision making is streamlined. We don't need to produce reports for the sake of reports and us covering frankly speaking. We only produce reports when they are required to. And we have an excellent technical team in-house that can evaluate opportunities without going to consultants. And then finally, it's access to capital. We're a small company, but we have access to significant sources of both debt and equity capital, as the first acquisition demonstrates, where we are able to raise capital both for the transaction and for the subsequent investment into the brownfield expansion very quickly. And that's the key competitive advantages that ACG Mining has: experience doing M&A, excellent operating technical team, ability to move fast, and access to capital, which give us an ability to stay ahead in the competition that you mentioned.
Every project has its own engineering headaches. What's the most technically challenging aspect of your current project, and how are you approaching it differently from the standard industry playbook?
Well, we are very fortunate that the asset we acquired had this potential for the brownfield expansion. Brownfield means it is an addition to what is already built. So we have the mine, we have the infrastructure connected, we have the mining contractor, we have the team on the ground, we have all permits in place. Our project is very simple one, and simplification is the best way to get things done. It's only building a two-stage flotation. It's a building a tailing facility, a place to store waste, and the camp for workers. Everything else is in place. So from the engineering perspective, this is as simple as it gets, right? Clearly, even if it's simple, if you're approaching it from the ground zero, there could be challenges. So the best way to overcome challenges is to work with teams and companies and people that done it before. Our EPC contractor is the same contractor that built the first phase of the Gediktepe mine, meaning the production from the oxide layer through the heap leach and Merrill core plant. We are producing gold and silver doré. Our contractor GAP, Intelsat, is the one that built the first phase of the mine. There's the same EPC contractor that we are using now to build the second phase of the development of the mine. So they're well familiar with the site, with the team, with the subcontractors, etc. Plus, on our side, our project director, Graham Ripley, is someone who has built 13 of those projects worldwide and billions of dollars. He also built a big project for Centerra, Oxo Gold project in Turkey, so has a familiarity both with jurisdiction and with a big project. Gediktepe's sulfide expansion project is by far the simplest, the smallest of what Graham has built. So we have de-risked the project both on our management, but also on our EPC contractor. And it so happens that our EPC contractor is also a subsidiary of our key Turkish partner and a 30% shareholder in ACG, a Turkish conglomerate called Çelik Holdings. So essentially, it's our sister company, which also de-risks the project. So it is no surprise to us that halfway through the construction, we're on budget and on time.
Can you think of a moment when feedback from the local community made you stop, rethink, and actually change your project plan? What do you take away from that experience?
We have not had any feedback from the local community that made us to rethink the project plan, simply because we got engaged with the local community before we start executing on the project. And in any jurisdiction, whether it's United States or any frontier market, it is beneficial to have trusted local partners. And for us, Çelik Holding is such a trusted local partner who has introduced us to the local communities and where we are coexisting, co-inhabited with them and providing jobs and security and employment and contribution to the local budget. So we've seen ACG Metals through its subsidiary Polymetal in Western Turkey. We've seen as a good local citizen. And that is the key to getting any mining projects done anywhere in the world. You have to live at peace with your neighbors and you have to contribute to the community, both in monetary terms and in non-monetary terms. And as such, we are embedded in the local fabrics. We do not have people flying in, flying out. This is not our philosophy. We only have out of 300 workforce at the site, we only have 3 expats, and they live at the site. They are part of the community. So I cannot differentiate us from the local people who work for us. It is all the same group, and therefore there is no frictions.
You've worked in a range of jurisdictions in the past. Which one has surprised you the most, for better or for worse? And since Giditepe in Turkey, I'm curious as how you navigated the challenges there, especially with the recent inflation pressures.
Yeah, thank you. I have to say that out of many countries I worked in, and there were parts of Africa, in Central Asia, and globally, mining is a global sector. I'm most pleasantly surprised with Turkey. I haven't had an asset operating in Turkey before. And now I can clearly state that the biggest risk in Turkey is to your waistline. The food is too good. Otherwise, I don't see any other operating risks. It's a well-developed country with terrific infrastructure, with a very supportive government to the mining industry, because Turkey imports all of the basic metals, and they want local production, and the mining industry is seen as an important driver of economic growth, and therefore there is a number of higher education institutions, universities that are preparing the professionals for the mining sector. I have been very positively surprised by the level of professionalism of the locally trained mining engineers and geologists and metallurgists, etc. So there is a deep pool of expertise available in the country. The rule of law is there. As I said, the government is supportive to the extent that it gives rebates on the government royalties. Our effective tax rate is 12.5%. So it's an excellent jurisdiction, and we'll certainly want to do more in the country. When it comes to the inflation, there are two things. One is a number you see on the front page of the Financial Times or an article in Bloomberg, and then there is a reality on the ground. Reality on the ground are such that we managed to reduce our all-in sustaining costs in the first half of this year versus first half of last year by 13%, and C1 cost by close to 40%. Why? It's tight cost management and cash flow management. Two, it's a very competitive mining contractors. There are three main contractors in Turkey. They always compete with one another, and they give a good rates. And the fact that a number of items are denominated in local currency, which is lira, that has been depreciating against the dollar, that also helps. But mostly it's ability to control the operating costs. And that points to the professionalism of the team, as I mentioned. And we have a good combination of the local expertise and international expertise at the site now.
If you were to sit down again 3 years from now, what one strategic move you're making today that you think will give ACG Metals a real edge by then?
Oh, gee. Well, as I mentioned before, I do believe that copper prices are on the rise, but that increase will happen gradually as demand outplays supply gradually. And in 3 years' time, we'll have a different floor in the copper pricing. I don't know what it's going to be. I'm not in to make bets on future commodity prices, but what I can make bets on in our ability to operate mining assets at the lowest possible part of the global cost curve, and that gives you the cash flows and the free cash flow margin. So today we're in the first quartile of the global cost curve. In gold, we will be in the first quartile of the global cost curve in copper. So if you think about 3 years from now, as you asked, I think the ability to get other similar type of assets to Giditepe under our belt is critical in order to build the size and scale and synergies between the assets when the copper prices are high, and we can focus on exploration and greenfield developments.
Wonder if you can just give us an overview of some of the key players at ACG and what they contribute to the company.
So we are a small team. but we are a highly experienced team. If I start with the board, I briefly mentioned my background. On the board, we also have former head of copper at Anglo American, Foil. We have among the independent directors, other independent directors include Mark Kutis, who used to be Chief Investment Officer for Global Situation Group at ADIC, Abu Dhabi Sovereign Wealth Fund, so our man in the Emirates. We also have Fiona Powell, 35 years in commercial banking in the mining sector. So excellent intro to any mining finance institution in the world. We have two representatives of our major shareholders, Mustafa Aksoy, who is the CEO of Lydia, our Turkish partner, the subsidiary of Charlie Holdings, and Martin, who is the Chief Investment Officer for Argentum Creek, our key American shareholder, plus Mike Pompeo, former head of the State Department and former director of CIA in the first Trump administration, joined us in the beginning of this year as well, which tells you that we are a growing, small but growing platform which designed to have already a board for a much bigger company. I have two advisors on top of the board. Robert Friedland probably does not need introduction to anybody listening to your podcast. And a similar well-seasoned mining investor is Warren Gilman, who used to run money for Mr. Lee Kai-shing in the sector for many years. Now has his own investment company. That's on the board side. At the management level, Patrick Hanze is my CFO, been in all parts of the mining value chain from the finance perspective, from the bank to the private equity to the corporate, and now leading our finance block. We have a chief legal officer who used to be partner at Kirkland, responsible for the whole of Asia. And other senior figures include Graham Ripley, who is a project director, as I mentioned, built 13 projects worldwide and billions of dollars, none behind schedule or behind or above budget. The most recent additions to the team include Yaya, our chief metallurgist, who already managed to improve recoveries at our operation, and that helped us to increase our production guidance for the year. And then there is number of other people, but it is I guess it's not the number of people, it's the quality of people, and the fact that we have access to the deep pool of talent in the mining sector without using any executive search firms. When we acquired Gediktepe in September of last year, ACG was 2.5 people full-time, me, Patrick, and the finance director. And now we are essentially fully staffed very quickly because we have access to the talent that we can call upon. And frankly, people are very excited to join a startup such as ours because we have big ambitions.
And lastly, what's the outlook for the next 6 to 12 months for ACG? And also, is there anything else that you want to share with our audience?
Thank you. So ACG is a combination of the base case business plan, which is continuous production of gold and silver, generating high cash flows. And the investors should look out for our operating results and H1 financials to be published in September. It is that's number one. Number two, it's execution of the sulfide project, where we will be updating the market as we continue to build on time and on budget, commissioning in the beginning of next year, and getting to the full capacity by full nameplate capacity by middle of next year. That's a big driver. The third element as it comes to the existing operations in Turkey is our ability to continue producing gold and silver in parallel to production of copper and zinc concentrate, meaning utilizing the oxide plant we currently have after we exhaust the oxide layer, which is on top of the deposit. And the key challenge question there is so-called enriched ore or transitional material, which is in between oxide layer and in before sulfide layer. One doesn't go into another. As you cross the line, there is some intermediate material. In our case, we're going to have 4 million ton of that material, which is currently treated as waste. And we're currently working on the technological solution to process that material, which is still very high grade, like the whole of Gediktepe. Gediktepe is 2.3 gram copper equivalent per ton, which is very high in today's world. So that's an existing operation where we see 3 to 5 times upside in terms of the share price. As I mentioned, we're currently trading below 2 times free cash flow, 25% price to 0.25x price to NAV. So there is a very significant upside without us having to raise any additional money. We are fully funded for implementation of that base case business plan. And then obviously the M&A, which will turbocharge that 3 to 5 times return to significantly higher. What it is, we'll see, depends on the transaction that we will complete. But I have some optimism in our ability to complete deals for the reasons I mentioned before, but also because we're working at the same time on a number of them.
Yeah. Artem, thank you very much for your time. Really appreciate you giving us an overview of ACG Metals, your outlook obviously of copper, and describing obviously some of the transactions that you've been involved in. If our audience wants to reach out to you, if they've got any questions, and obviously also follow the story, how can they go about doing that, and what social media platform channels are you on?
Website acgmetals.com. We are on LinkedIn. We are on X. We are on YouTube. So please do watch out for the communications that are coming through. And as to how our share price perform in the next 6 to 12 months.
Good. Thank you again. Hopefully you can come on the podcast next year and give us an update. You might even have some more transactions, or hopefully you will have more transactions that you can discuss with us.
Inshallah, as they say in Turkey.
Yeah. Thank you. Thank you. Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. It's a great startup here, great story. So really appreciate if you can follow their story, and hopefully Artem can be on the podcast next year and we can see how they progress, because obviously they've progressed quite a lot in the few years that they've been in business. So as always, appreciate your continued support. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.